So this is the trading journal of a very profitable trader. He has a net return of 35% and he asked us to take a look at his data and make sense of him, maybe help him out, give him some tips on his journaling. So the first thing that we always do is we look at the win rate, the average P&L to see if there are things that stand out. The win rate is close to 40%, which is not really high, but typically that's more than enough. And you can see the average P&L here. His winners are almost 3 times the size of his losing trades. So even with a win rate of 40%, this gives him a very profitable trading approach. The question you can then ask yourself is, first of all, can we get the win rate up? And second, how can his winning trades be even larger? So let's try to tackle the win rate question first. How can we get the win rate up? Unfortunately, when we go to the trade comments and we look at the entry, he doesn't have any qualitative comments. So what he's tracking is market and limit. What we would recommend for the entry comments is to have qualitative data, which means did you break your rules or did you follow your trading rules on your trades? This is really helpful because if you see that you are breaking your trading rules on your entries, it means that if you can avoid all or at least some of the trades where you're breaking your entries, this would help you improve your win rate, obviously, because typically what you will see is that the trades that where you're breaking your trading rules, they more often than not will end up being losing trades. So avoiding those and working on those would be really helpful. So the first suggestion here for the trader is to change the way he is using his entry comments and from now on distinguish between trades where he followed his rules versus where he broke the rules. That will give him much better insights and will help him get a deeper understanding of his trading performance and his behavior. The next thing then we can take a look at is his P&L, so the reward to risk ratio. As I said, the winners are 3 times the size or roughly 3 times the size as his average losing trade, which is an excellent ratio. What you want to analyze when it comes to reward to risk ratio and exits and winning trades is the trade management graph. Unfortunately, he doesn't have the data in his journal. And this means we cannot really say if he's leaving money on the table on his winning trades. Typically, what you will often see is that traders exit their winning trades a little bit ahead of their target. And this would be really interesting to see. To fix that, it's actually quite simple. So when you're in your journal and when you're entering a trade, all you have to do is go to the advanced trade data and then tick your OTP yes or no. And you have to ask yourself, was the initial target hit before the initial stop loss? This is independent of your exit and where you actually exited the trade. So this will then unlock the trade management graph and will give you additional data points. The second thing here is the exit analysis. And again, he only has data for one trade, which is obviously not enough. But I would recommend for this trader to also start looking at his exit analysis. What this does is that for each trade under advanced trade data, you enter the highest and the lowest price point. So when you're in the trade, what was the highest price and what was the lowest price that you can observe? Or alternatively, this is a day trader, which I saw here on the holding time. So his holding time is a few hours or minutes. What you could do as a day trader, at the end of the day, you record the highest and the lowest price for that trading day or only for a session. If you're only trading the New York session, for example, you want to do that and you want to look into the highest and the lowest prices there. It will give you additional data points. It will show you how close is the price coming towards your target versus how close is the price coming towards your stop loss. For example, what you could see is if the price is not coming towards your stop loss a lot, and your stops are quite far away for how the price behaves, you could think about pulling in your stop loss a little bit closer to your entry, and that way you could boost your reward to risk ratio slightly. Or maybe you're seeing that the price is overshooting your targets, and then in that case, you could think about experimenting with setting your targets a little bit further away. Those would be all really interesting data points for this trader. So what he's currently doing in his journal is he's only tracking the absolute minimum which you get by importing your trades, right? You get all of those data points from your broker. But if you really want to work on your trading, you need to spend a few more moments on each trade, setting the entry comments, adding the highest, lowest price, and adding the OTP hit field for each trade. You have to spend a little bit more time on each trade because the data that you will get then out of this can be really valuable once you're able to scale up your trading and extract even more edge out of your trades. So this is actually a very good time invest, and it can pay off huge dividends in the future. Another thing I noticed is when we go to the performance by time, because he is a day trader, I want to look at the hour of the day. And here's something really stands out. This is something that we are seeing time and again for day traders. The majority of his performance is clustered here around the center, right? From 8 a.m. until, let's say, 12 noon. That's where he is making most of the money. He's having a little bit of trades here early on, and he has having trades after 12, but those trades here after 12, they not only cancel each other out, but they're actually eating up his performance. So he's negative performing afterwards. So what this trader could do, and this is something that we keep recommending to day traders because this is a pattern that is so obvious, is that you only trade around this window where you have most of your performance. Typically, this is going to be around a market open, and this here would also make sense based on the data that he's having here. Around 8 a.m., 8:30 until 12, that's typically where you see the big open volatility. And that's where the traders will usually make most of their money. So this trader could actually have a much shorter trading day and still end up making the same, maybe even more money. So this trader obviously is already having a very good performance. 35% over a little bit over a year is very outstanding. I think you could squeeze out more performance here, but for that you need to spend more time on your journal to get those extra data points in. And those extra data points will be really, really helpful in the future.